Welcome back, investors, to Ticker Time News. I'm Adam, and let's start off with what's on everyone's mind. The one thing, the CPI report. It comes out tomorrow, 8:30 a.m. Eastern Time. Now, I shared with our investor community on Patreon the expectations, what they are, and how the market will react based on beating or missing those expectations. So let's just go over real quick what I said. Starting with the July Consumer Price Index will be released at 8:30 a.m. Eastern on Wednesday. Expectation calls for a 0.2% month-over-month increase in total CPI and a 0.5% month-over-month increase in core CPI. And remember, the Fed looks at core CPI more than it does at the whole breadth of the CPI report. And it's for a very specific reason I mentioned a little on further. Okay, it continues. Where did I leave off? Okay, which excludes the core CPI, excludes food and energy. That would leave the year-over-year change at 8.7%. That is CPI, the year-over-year headline number. The expectation is 8.7%. And 6.1% for the core CPI headline number. Now, last month, 9.1% was the CPI reading. So it's gone down this month to 8.7 as the expectation. As far as last month for core CPI, which takes out food and energy, that was 5.9%. The expectation has gone up for core CPI to 6.1%. So we've got a divergence here. With CPI, the expectation being 8.7%, that is lower than last month. But core CPI, that is expected to be higher than last month. Now, I continue on here. The moderation in energy prices is expected to be the downside driver in total CPI, whereas elevated shelter costs, namely rent and owner's equivalent rent, are anticipated to keep core CPI at a higher elevation. Now, a few live streams ago, I believe it was Thursday of last week, when we were talking about CPI, I specifically mentioned that housing is a flag that's waving that has me a bit cautious on the CPI number and whether it can come down far enough to the expectation of 8.7%, because rents have been going up. And although the majority of housing prices has started to stabilize or maybe even come down a little bit, it is still a big, or has a big impact on CPI. I believe it's up to a third of CPI is shelter. Oh, excuse me there. Okay, moving on here. If the monthly numbers hit the consensus mark, the market reaction should be muted. After all, there would not be any surprise factor with inline results. The market's trading attention then will be fixed on any numbers outside of the expected ranges. Now, the highlighted part. This stock market desperately wants a report that supports the peak inflation narrative or theory. It might get that on total CPI, meaning the market may get what it wants on total CPI. The number may come in line, or the number may be off just a little bit to the downside. That's what the market wants. However, at the same time, it might not be getting what it wants when it comes to core CPI, meaning core CPI could be higher than expected, signaling more hawkishness from the Fed. So the rest of this, I'll read one more paragraph here. Recall that Fed Chair Powell has said that the Fed's tools don't really work on supply shocks, meaning the Fed cannot affect things like oil prices or food prices. That's why those two items come out of CPI for the core CPI reading. It's out of the Fed's hands. Hence, it pays closer attention to trends in core inflation, which is where its tools can have an impact because its tools work on demand, not supply. Okay? Now, the rest of this goes over what to expect if the number is hot, meaning the number for CPI is over the expected 8.7%, or what will the market do if the number is under 8.7%? I think it's pretty logical what the market will do based off of whether it's over or under 8.7%. But I will save that for our investor community on Patreon. I think that's the fair thing to do. But we can still talk about it in a little more depth as we move on. But I wanted to point those important parts out because that's what analysts are expecting, what the Fed can control, and what the Fed focuses on. So while the headline number is what most investors will focus on, the Fed really doesn't look at that. The Fed cares about the core CPI number, which takes out food and takes out energy. Why? Because the Fed cannot control those two items. Okay. Now, I just want to add that the options market right now, who is right 68% of the time, is calling for a plus or minus move of 5.06% for the SPY. So that's a big move. Today on the SPY, let me pull that up here real quick. Today on the SPY, it was down 0.4%. Okay. The last time we got a move even close to that, my gosh, where do I have to go? It would be a big candle, a really big candle. How about here? No, that's still not 5%. That's 2%. Okay, maybe back even further. Come on, 5% somewhere. 3.7, 2.9, a 5% move. It hasn't happened since the beginning of April, and this is as far back as I go right this moment. But if we just look at the FOMC meeting after the Fed came out and Fed Chair Powell gave his press conference on July the 27th, the market, the SPY, went up 2.6%. So the options market is calling for a doubling of that at 5.06%, more than double, plus or minus. So it can go up or down by that amount. Now for the Qs, it gets even more crazy. Okay. The QQQ was down 1.13% today. The options market is pricing in a move plus or minus of 9.94% for the QQQ. That is a humongous move. And let me just look here real quick at some of the bigger candles. Oh, that's 2.7. How about back here? There's a 5%er. All right. So on the 5th of May, we had a 5% drop in the Qs, and that's right here. That was a 5% drop. The options market is pricing in a 9.94% move, up or down. That'll be a humongous move. And again, that's for the QQQ. Isn't that crazy? 5% move for the SPY, and let's just call it a 10% move for the Qs. That's what the options market is pricing in. Okay, let me plug this just real quick, and we'll move on to the rest of the market. If you would like to get instant access on weekly expected moves, numerous trade setups, top 10 stocks in 4 different categories, and market and economic insights, just like this post we went through on CPI. Plus, our investor community is coming soon to Discord. I am working on it, all to help you along your investor journey to becoming financially independent. If that's for you and you're interested, then simply click the first link in the description to get instant access and join investors just like you and me. I really think you would enjoy it. Okay, moving on to the broader market. I need to pull Micron up. Ticker symbol is MU for Micron. Today's market, Micron's warning ahead of the open set the market up for a weaker go at it. The stock market saw some up and down price action today, but stuck in a fairly narrow range on negative or in negative territory. It was a bit of a wait and see trade ahead of tomorrow's CPI report that comes out again at 8:30 a.m. Eastern. It is a big report and it will move the market up or down, or maybe chugging along, chopping sideways. It all depends on what number comes out. Now, Micron's warning was about Q4 revenue. They warned it would come in soft, under expectations, not very good. Pair this with disappointing guidance from stocks like Signet Jewelers, who was down over 11%, nearly 12% today. Novavax, who was down nearly 30% today. This fueled existing concerns that the market got too complacent in the midst of a sentiment-driven rebound effort off the mid-June lows, and the market is due for a pullback. Okay, Micron, here it is, down to 3.7% during regular session, flatten after hours. It's lowering its revenue guidance for the coming quarter. Not a good look. More and more companies will be doing this as we get closer to Q3 earnings season and as we get into Q4. More and more companies will be doing exactly what Micron did today, especially in the tech sector, right? Okay. One thing I want to point out for Micron, if it does get its rally going again, and I just don't think it's going to happen, I'm leaning towards a hotter reading than expectations for CPI tomorrow. But if things were to reverse, Micron has got a stiff resistance right here at about the $65, $64 range. You can see the support on the left side of this red line here. That support was very strong, steel bar. So it's going to be a steel bar resistance if Micron can pull it back up that high. All right, let's go to the SPX to look at the S&P 500. The ticker symbol SPX. You can do all of this charting at home along with us. There is a link in the description to TradingView. Click on it, sign up, doesn't cost a penny. All right, looking here at where we're at, we are moving down towards the bottom side of the weekly expected moves, which are the two purple lines that you see across the screen. We are moving towards that bottom side, and that sits at 4,057. Now, the upper end, if things were to go that way, is sitting at 42.32. And remember, the options market is correct 68% of the time, and that's exactly where you'll find these indices and even individual stocks land by the end of the week. I bought a put and a call for $90 each. Let's hope it actually goes plus or minus 5%. That sounds good. I did something very similar today. I straddled like that with a longer position and a shorter position to kind of whichever way the market will go, it's already set up, and I'll just add to it while the market just takes off. Or, the other side, I'll just cut my losses at where they are, or maybe the stop loss will trigger. So we'll see. But I did something very similar to that today as well. Just setting up for it. I'm leaning a little bit more on the shorter side of things than on the longer side, because I'm just not sure how far, we were at 9.1% last month. Can we really come down that far to the expectation when shelter is still holding up pretty strong, even though it is weakening and it is, slowly coming down? It's still elevated. And again, I think it makes up about a third of the weight for the CPI report. So it's a red flag for me that I just can't get past right now. But we'll all find out tomorrow for sure. We're just hours away now before we know. Okay, so remember I've been talking about there's this eerie similar situation that occurred back here at the end of May, beginning of June, to what's happening right now. We had the big explosion up. We had a big explosion up. We consolidated. Although back here at the end of May, beginning of June, that consolidation or contraction phase was a little more squared off, right? We had a pretty defined resistance line, pretty defined support area. But now, and this is why I say history does not rhyme. I'm sorry, history does not repeat. History rhymes, is because here, what we've been doing is more of this rollover, right? Where the market has rallied, big July rally, and now we're kind of rolling over the top, getting ready to set up. It's like the roller coaster, right? Click, 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 all the way up to the top. And then it's a slow go, especially if you're in the front seat. Very slow going over the hump. And then all of a sudden, boom, it like takes off. That's what is kind of, it's what I'm thinking could be happening here. But anyways, we're having more of an arch here, or rollover, versus the more defined support resistance, contraction, consolidation type of pattern that we had back here. So something different there. Plus, man, oh man, another similarity. This gap right here that we have to fill, this green bar right here. All we have to do is come down to the bottom of the weekly expected move and we'll fill that gap. Well, if we go back, to the end of May, beginning of June, there was a gap that needed to be filled right here. And that day that we fell hard, we filled that gap. So is that what we're setting up to do tomorrow? If so, then the similarities between the moves right now that's happening in the market versus what happened at the end of May, beginning of June would just continue to be, oh my gosh, they're like on par with one another. A few differences, but man, the main message is right there. All right, let's dig into this market a little bit more today. The selling pressure, it was broad-based, but semiconductors. Man, semiconductors have been having the ride of their life, right? But now that ride's over. Let's look at NVIDIA, NVDA. Now, remember yesterday, NVIDIA, like Micron today, came out, pre-announced that they're not doing as good on the revenue side of things, especially with gaming, as they, oh, there I go with the highlight again, as they would like to have been. So NVIDIA pulled back hard yesterday, broke below the bottom end of the weekly expected move, continued falling today, 3.97%, and it's just getting hammered. It is now below the 20-day moving average, which acted as support yesterday. Today, it gapped down and used that as an area of resistance. But the 50-day moving average is currently sitting at 170.07 a share, and we are at 170.86 a share. So we are pennies above that 50-day moving average. And remember, with that 50-day moving average, bullish above, bearish below. Now, the other negative or bearish feeling here in the short term. If I go to the 15-minute here for NVIDIA, hold on, I gotta click one button to clean this up. There we go. NVIDIA is way below its 5-day EMA, which sets this up in a very bearish context. Now, the two positive things that I want to point out here is yesterday, which would be, let's get that highlighter again, which would be this section right here. You had the big rally and then fall immediately in the morning, but it did rally into the close. And then for today, it did pull back hard, but it rallied the rest of the day. Meaning there are investors who want to buy and own NVIDIA, and it's almost like the 2020, 2021, buy the dip. It's almost like that, where investors want to own this, and that's what they're doing. They're buying the dip. But for me, there I go again. For me, I really want NVIDIA 150 or below, right? Like I would love 140, 135. All right, work with me here. Hold on one quick second. I just want to get it up here so it's not down in the volume candles. So this green box right here, this is my buy box for NVIDIA. It did tap in there earlier this year, earlier in July, not that long ago, before it turned around and started to rally. But I would really like to get this thing sub 140, 135 would be so much better. But the top of this box does start at 150. And that's when I'd be looking really hard and, got this thing up on the screen and I'm watching it daily. Until then, I'm not doing anything with it. But that's what I would like to see. And speaking of semiconductors, we also have to talk about semiconductor equipment makers, just like Applied Materials. Ticker symbol is AMAT, AMAT. Almost, every subsector of the of the semiconductor industry, they got hit today. Applied Materials down 7.58%. Big fall. But one thing I want to point out here technically on the chart for Applied Materials, this is another company that I like. There was a strong resistance. That's this blue line right here. Resistance once it fell through. Let me get the highlighter again. Once it fell through, that beginning of June, resistance finally broke through and then turned around as support. Its pullback today conveniently stopped at this blue line. So I'm curious about this. Is there enough momentum here for this company? I mean, a lot of investors like it. It's sub $100 right now, and that's not typical. And if you look at the volume profile, there is supply way up here. Let's see, we got to get to 110 up to about 120. There is interest up there. Now that's going to be obviously resistance area coming back up, but there's investors up there. And then if we go down here at this mark right here, that's at about 97. There's interest at that price point. There's also interest down here at 89 or 90. So I think in this area between 90 and 100, there's going to be a lot of interest for Applied Materials, and it could just bounce around and move sideways in between those two price points for a while, if things continue to move negative for them. So keep them on your radar. I like the company. And here on the chart, if it could get back into its trading channel, that would be pretty interesting, especially if it just, kind of marched sideways. All right, so these two groups, semiconductor and the semiconductor, the builders like Applied Materials, these two groups, they struck out as particularly weak after Micron's warning, specifically Micron's warning. And of course, don't forget yesterday, NVDA had its own warning. Now, if we look at the Van Erickson Semiconductor ETF, ticker symbol is SMH. We've got weekly expected moves up for this one as well. We do weekly expected moves released every Sunday for all 11 S&P 500 sectors, all the indices, a handful of subsectors, and a handful of individual stocks. There I go again, using the highlighter when that's not what I want to do. All right, if we're looking here, pull it up a little bit. It fell pretty darn good. It gapped down yesterday to today, right to the bottom side of the weekly expected move. It has pulled out. It has used its 20-day moving average as support, which is bullish because it's still above its 50-day moving average, down 4.19% today. There's a good possibility. It all depends on the news tomorrow. But if the news tomorrow is neutral to good, then there would be a really good chance that the semiconductor, Van Erickson Semiconductor ETF would go right back up to the bottom half of its weekly expected move. Because remember, 68% of the time, that's where these things close by the end of business on Friday. So with the Van Erickson Semiconductor ETF falling, it's down amid growing concerns that the cyclical semiconductor industry could be entering an extended slowdown phase. We talked about this yesterday about NVIDIA and what could be slowing NVIDIA down. Could the entire semiconductor industry be entering into this exact slowdown phase? Well, if growth is slowing down, if the economy is shrinking, the answer is yes. Okay. You can see price action has broken out to the bottom here. And it's like we said, like I said just a moment ago, it is below that weekly expected move. It did bounce off that 20-day moving average. That's possible. However, if this weakness continues, I could see it pulling back into its old trading range. It was down over 4% today. From where it is right now to the top blue line of its old trading range, that resistance area, that's just another 4% fall. A 4% move to the downside, and it would be there. So that's interesting. Can it get there? Just like Applied Materials. All of these semiconductor related names, how they have run up over the past month on good news, the CHIPS bill that, is in law now, or at least signed by the president. If all of these names come back into their trading ranges, that would be interesting. All right. Another drag on the index performance was the lagging mega cap stocks. If we look at the Vanguard Mega Cap Growth ETF, ticker symbol is MGK, it was down 1% versus a 0.6% loss in the Invesco S&P 500 Equal Weight ETF. Ticker symbol is RSP. And then you can compare that to the S&P 500, which lost 0.4%. So it's not a huge mover, but it's big enough and it's noticeable enough that the big mega cap growth companies, they did not help the market. They pulled the market down today. Now, Microsoft and Apple, they were moving against the grain today because they did close with small gains. They offered a bit of a measure of support for the information technology sector. And then we just pull those sectors up here. But information technology, it was down 1%. Okay. Now, these are the 11 S&P 500 sectors, but there is a few other names in there. NVIDIA will continue to guide down. Last time something like this happened, it affected their new products for years. They got greedy selling so many cards to crypto miners like in 2017 and 2018. You are absolutely correct. Absolutely. There are several technology companies that got greedy. And unfortunately, the workforce is going to pay the price for that greed in form of layoffs. Yep, just like we went into detail yesterday. Okay, technology sector being down 1% today, but it was not enough to offset the weakness of semiconductor stocks and other components. Besides information technology, the top laggards were consumer discretionary, and that was down 1.5%. And then we have communication services down 0.7%. Now, thanks to their mega cap components, that's what dragged them down. The consumer discretionary sector, though, I do want to point this out. It was held back by one of the worst performing names in the S&P 500 today, and that was Norwegian Cruise Lines. Yeah, the ticker symbol is NC. NC caught me off guard there. LH. They were down over 10% after a disappointing quarterly earnings report. So, yeah. It sunk. Dad pun intended. Yep. Right. Okay. Moving this up a little bit so you can see that. Big move down. However, one thing that I will point out, and I'll put a trend line here on it, even though it fell 10% today, if I were to, put a line like that, it is making higher lows. 1, 2, 3, 4, 5 sets of higher lows. That's exactly what you want to see. And then if we look towards the top here, it is, let's see if I can, yep. It is making, oh man, that is a slight higher high. Very minimal, but it looks like we're moving into either a flagging pattern or a wedge pattern, which could be very bullish since we are coming out of this, we had this big fall here. There was a little bit of consolidation, not much, and then another big fall. This could continue. Price could continue to get tighter and tighter, and then this thing could have a breakout or breakdown and drop further. So that's what it seems to be setting up to do there. So if you're watching cruise stocks, keep that in mind. But this was a heavy hitter there. All right, let's talk about oil. Early in the morning, oil prices were rising. Let's pull it up. US OIL, it's the easiest thing to remember, US oil, and that'll get you to WTI crude. Let me adjust this on the right-hand side so you can see that pricing here. Let's pull this up a little bit. Okay. It's at $90.32 a barrel right now in the after hours. Now, prices were rising with WTI crude oil futures up 2.1%. It got up to $92.65 a barrel at its high today. This pushed the energy sector up to 1.8% to end the day. And that was in the top spot for the day. Energy. It's either the top spot or it's down at the bottom. That's how energy has been going over the past couple weeks. But this green bar going across your screen, it is holding up as support for oil, which is $90 and above. if this breaks down below $90, closes and stays below $90, then we're looking for further pullback. Now, if oil wants to move higher, okay, if it wants to move higher, its restriction is going to be its 20-day moving average, which is, it's kind of sloping over like this. And it's going to start pulling down further as price just kind of moves sideways. So that'll be a big resistance. If oil cannot break above that 200-day moving average, then oil, I think it's done for a while. Now, looking back historically, August, September are two of the weaker months for oil anyways. So we have that working there for oil. But the energy being in top spot today, despite oil prices rolling over, that's a pretty good deal for energy. Now, the gains in Occidental Petroleum, Oxy, OXY, which is, of course, in the news. You may have heard it because Warren Buffett has been buying it. It's up 3.9%. Yep, 3.95%. And if we just do a little bit of technical analysis here on it, I can put a trend line across the bottom right here. Not very supportive because there's only 2 points of contact there. When you're drawing a trend line, you want 3 points of contact or more. Okay. Now I could go, from up here and try to dial it down like this, giving us a bit of a wedge. And it does fit in there with the angle and slope here. So we could have price action for Occidental Petroleum starting to tighten up and coil up. And whenever we have contraction or consolidation, we have expansion. Since this was, excuse me there, I apologize. Since this was in an uptrend going into this pattern, there we go. Finally, I got the highlighter to work. Then I would suspect that this could end up being a bullish play once the price coils up and price gets tighter. Okay. So that was a good player for energy today, despite oil falling from its early morning highs. And of course, it's because Berkshire Hathaway, they were buying more shares. And that boosted sector performance, along with leadership from ExxonMobil, which was up 1.8%, and Chevron, which was up 1.3%. Before the pandemic, or I should say, right after the March lows of 2020, Exxon, Chevron, they weren't big market cap companies. Fast forward to today, and they are big mega cap companies now because of oil rising like it has, energy prices rising like it has for the whole of 2022. Yeah, we're getting a pullback and such right now, but Exxon and Chevron, we can throw Occidental Petroleum in that name too, even though it's not as big of a company. But those are some pretty big names, and they can move pretty rapidly now. So if you're into the oil trade, keep them on your radar. Okay. Do you think Warren will do a takeover? Am I reading that right? That's a really good question. In articles that I have read, and of course, listening to him when they had their annual meeting, he talks very highly about Occidental Petroleum's CEO. He says she does a good job, and she has done some things that were out of the box thinking, that were positive for the company. So I think they have a good CEO that seems to be a good match with Buffett. So it's an interesting thought process of whether or not he might purchase them. I think if they can get a good leg up in alternative energy, I think that raises the odds a little bit. But the one thing about an oil company, right? One day, maybe not too far into the future, we're going to get to the point where oil becomes scarce. When that happens, the oil companies that are in business and own a good sized chunk of the leftover oil, their share prices will skyrocket. So I think it is a good long-term play for Buffett. I think that's what he sees here. And it seems like this is the company he's betting on. Whether or not he's betting for an acquisition or just betting on them in general, I don't know if he would make the acquisition. It would be interesting for sure, but I don't know. I don't know the answer to that. I'm leaning more towards, oh man, it's just right now it's tough to say. Let me just look over here. Market cap of 58.4 billion. Earnings have been rising up, all in the green. Small dividend. Yeah, had a dip in 2020 with earnings. That's to be expected. Year to date, it's up 116%. Okay. Warren Buffett is a smart dude. This company is up 116%. That's a big chunk of change. That's a big move for year to date, for the past 8 months, right? A little over 8 months. If you were a big time investor, would you go in and buy a company that's up 120%? Or would you want to buy the company before it takes off 120%? I think that kind of might help me to lean towards the side of no. In the short term, I don't think there will be an acquisition. I think he is just, they like the company, so they are investing in the company. But for an acquisition to take place, I think the company would have to come back down in valuation. Okay. All the way to the left of your screen, just above my head here, that's where the 2022 begins in January. So it took off hard and heavy, especially after the earnings in February, almost straight up move. If I take the chart back a little bit further and look at 2021, it did not move like it has recently. And that's twofold. That's one, because energy prices, they skyrocketed. And two, because the news broke that Warren Buffett bought shares, everyone else wants to jump in and own the stock too, just because Warren Buffett owns it. So we can clearly see the rise of this company over the past couple of years. Look at that. You can see that great big fall from February 2020 into March. And it didn't really come out of this bottom until October of 2020. Go back just a little bit further. Let's give a little perspective here. on its current 62.41 price per share with a little historic look at the chart. And you can see it is not where its all-time high is, right? So there is room if you want to invest in this company. There is room for the stock to appreciate. But the question about the acquisition takeover, I don't think so. I don't. But it is making a nice little setup here, which I would continue to watch. This might be a good one. Okay, let's hop over to yields and look at that real quick. US 0 to Y for the 2-year yield. It rose 6 basis points today to 3.26%. It's up a little bit more than that here in the after hours. One thing that we were talking about, and we have been for weeks, is that the 2-year had resistance. Well, that resistance has been broke. Okay, so now we have to go and rethink this. Maybe we can start with about where it's at right now, which is about right there. Okay. Can this line now become resistance for the 2-year? Because what we need to get out of the yield inversion is we need there to be a lid, a resistance that is super strong on the 2-year, and we need support that is super strong for the 10-year to keep the yield from getting, or to keep the inversion from worsening, from deepening, right? So that's what we have to look at right now. So there's the 2-year. It has made its move up higher. Hopefully we can get some resistance going again for it. But it is making, in the short term here, higher lows and higher highs. That's not good. We want to see the 2-year come down. All right, let's go to the 10-year US 10Y for the 10-year. And the 10-year rose 3 basis points to 2.8%. That's just rounding up from where it is right now. So again, that looks good. Now we want to see this gray bar here. We want to see this keep as support. And we want the 10-year to rise. We want the 2-year to come down. Okay. So there's its structure. Short term, it's making higher lows and it's making higher highs. So it looks like yields could be rising here in the short term. Tomorrow, and the inflation data will help us to understand a little bit better on where yields may be going. Okay, looking at today's economic data, I sent a note out to our investors on Patreon, and this is it right here. Here was the title: Q2 productivity sinks again, and unit labor costs surge again. Again, everything is just again. So the productivity was negative 4.6%. Expectation was negative 4.5%. Q2 unit labor costs were 10.8%. Expectation was 9.3%. So the main takeaway here, and this is exactly what I shared over here with our investors on Patreon, is that the key takeaway is the 2.5 decrease in non-farm business sector labor productivity from the same quarter a year ago was the largest decline in labor productivity from the same quarter a year ago since that data series began in the first quarter of 1948. So it's been 7.5 decades? It's been 7.5 decades. This was the biggest decrease in productivity in 7.5 decades. So, let me get this right. Workers today are working more hours, but are far less productive than workers over the past 7.5 decades. Think about that for a moment. What does that say? Does that mean that workers today are just flat out overworked? Therefore, their productivity declines? Is it because they're working more hours, spending less time with their families, therefore they are unhappy? When they are unhappy, their productivity goes down? Is that what you're getting from this? That's where my mind goes. Where does your mind go on this one? I'm curious if you're thinking the same thoughts I am. Why is productivity going down so far? It could do happiness could be the reason. All right, here's the dollar. Okay. The dollar has been in a decline over the medium term here. In the shorter term, it has been rising. Let's go in here and look a little bit. So this purple vertical line here, this is when the FOMC meeting was. So it was the last time the Fed raised rates. The dollar dropped. And it dropped for 1, 2, 3 consecutive days afterwards before finding its footing at the 50-day moving average. It literally bounced just a few dollars off of that. As a matter of fact, the low was 105 and the 50-day was 105. Since bouncing off that 50-day, it has been making higher lows, not so much higher highs. Let me trend this out. Let me put the lines on here. So we can run up just like this, and we can tag them all perfectly there. Okay. And then on the top side, there's 2 ways I can go. I can go from the FOMC meeting and wedge this thing, which means, oh my gosh, if I wedge it just like that, that puts tomorrow right at the tip of this wedge, meaning tomorrow's news on inflation is going to move this dollar in a big way, up or down. So that's interesting. I didn't do that before. Maybe I should have. But yeah, it's right there. Let me line it up. I mean, look at that. The points, look at that. Those points are right there perfectly together. So tomorrow is going to be an interesting day for every place you look. It's going to be interesting for tomorrow. Plus, we get earnings tomorrow before the open. We've got Ballard Power, we've got CyberArk, we've got Fox Corp, Jack in the Box, and Wendy's and Wolverine, all tomorrow. Wolverine, such a cool company, right? Ticker symbol is WWW. Reminds me of the old days of WWE. Wolverine Worldwide. Let me pull this up here a little bit. Okay. Down 6.7% today. Consumer non-durable apparel and footwear dropped down here. Pretty big dividend there, 1.7%. Past 4 quarters, they have beat. They had a drop in earnings on 2020, down 24% year to date. The past month, they're up 20%. You can look into this company if you want to. Apparel, footwear, lifestyle, athletic uniform, apparel, yeah, all kinds of things. And they're in, what is that, Michigan? So an interesting company. They report. So another apparel, good combination there for different parts of the economy tomorrow. But the final word today, the CPI report, it seems to be very binary. Either it misses or it doesn't. And it's really hard to judge right now the market reaction. So investors, please make sure to read the post, All Eyes on CPI. That is a very important post. The bottom section that I did not read out loud here during the live stream, I want to save that for our Patreon members. Make sure you read that. It should clarify a lot on what the market will do if expectations are hot, expectations are met, or expectations it's lower. Okay, so make sure of that. All eyes on CPI, and I think I even put in expectations in the title as well. So please make sure to read that one. I think it'll give you great insight on tomorrow. Okay. Whatever here. Another thing to mention here real quick is remember to manage your risk. Use stop losses, small position sizes, and don't be afraid to take profits. Okay. Let's see. Oh, what are unit labor costs? All right, let me put that up on the screen here. Let's see, and click. All right. My mouth is dry. I totally forgot to bring a drink in here. The unit labor cost. It's how much a business pays for workers to produce 1 unit of output. It can be measured in different ways. The formula that Google has is unit labor cost equals compensation or hourly pay divided by output per hour. That's the equation that Google has here. So let me give you an example of when I had a grounds maintenance company that I ran, that I owned. If I have a truck and a trailer that's got the lawn maintenance equipment on it, and I send out a 3-man crew, okay? When I gave estimates for a property to mow the lawn, aerate, seed, mulch, whatever, okay? Everything was priced by square foot because I had several people who would go out and give estimates, and it took me 5 years to come up with the exact formula for how much everything should be per square foot, because you can't just send new people out and say, go give an estimate for this property, and they're just eyeballing it because 3 different people are going to get 3 different prices. So I came up with a formula. Everything was by square foot. So when I would send this crew out to mow lawns, I knew exactly how many square feet they would mow in a day. Each property, it had the square foot, 20,900 square foot property, 30,100 square foot property. So I could add up the total square foot that they would mow, that one crew, in one day. I know what that cost me. Man hour. The leader of the group was paid like salary, but it was like a daily rate. So it was very similar to a salary, but they were paid a daily rate plus bonuses for quality and speed. I know those two things don't sound like they go together, but they can. If you do things in a certain order, you can get things done quicker than, say, doing things in a completely different order, right? Like you wouldn't paint a picture without paint. So if you have your paintbrush and picture and you can't paint, so certain way. I think I'm explaining this the long way when I should do it the short way. So anyways, when they're done for the day, I can take all my cost down to the square foot. And my unit was a square foot. I knew how much I would make per square foot, and I knew how much it cost me per square foot. So then if I had to fill out these forms, which you do occasionally, then I would have filled it out per square foot. That would have been my unit. My unit would have been per square foot. So I guess to sum that up, I take what I make per square foot, subtract out my costs per square foot, and I'm left over with a profit dollar number per square foot. So that way I knew then if I did 100,000 square foot, I knew what my profit was. And there are different ways companies come up with what their units are. If you make lemonade, then your unit may be an ounce of lemonade. It may be a gallon of lemonade, or orange juice. If you're doing apparel, it could be per shoes, per shoe, or per set, per shirt, or per shorts, whatever the case may be. The unit can be different, obviously, based on the different type of companies that are out there and everything that they do. Being in the grounds maintenance business, what I did was more service oriented. We provided a service for our customers of keeping their grounds looking pretty. So that's what unit labor cost is. It's that square foot and how much it costs me for labor in that square foot. Just as a quick example for a grounds maintenance company. Okay. I've touched on everything that I wanted to tonight. Is there anything else you guys want to talk about? Please make sure to read All Eyes on CPI. Outside of that, man, at 8:30 a.m., 5:30 a.m. on the West Coast, which is pretty early, we'll be watching those numbers, and we'll see how the market reacts. There could be an overreaction. As soon as the numbers come out, the market could change its tune once it's, had an hour or so to kind of look through the report and see what's in it. What exactly changed month over month or year over year, okay? I hope we don't have any funny reactions tomorrow. Yeah, I don't either, but I think the market is setting up for the market to drop while hoping that the market doesn't. Like if you look at Ethereum, it's the perfect example here. Ethereum had this trend line that we put on yesterday or maybe a few sessions ago. It had been riding that. It had, let's see, a 8% day up, 4.5% day up, and now yesterday down 4%, and today down 2.2%. So it's pulling back, thinking that the news is going to be bad and that inflation will be hot. Here's a broader overview, but I mean, it was over 1,700, and now it's under 1,700. So can it stay above that 20-day moving average? Well, if the news is good, yeah. If it's not, man, this thing could drop, go down and test that 50-day moving average, which right now is at 1384. So you are welcome. Thank you. I wish I could put both of these messages up at the same time. There's that one. You are welcome. And there's that one. You are welcome. So good luck tomorrow. Investors, again, go read that note on All Eyes on CPI. And then, of course, I'll be talking to investors tomorrow morning after CPI comes out and try to break down and explain what the numbers mean. So you can be looking forward to that. And then I'll be back here live tomorrow after the market closes to talk about what happened, why it happened, and what to expect. So good luck. And if you could, click that like button. That is very helpful. Also, share this video. And if you like this perspective and want more, click the first link in the description. All right, ladies and gentlemen, thank you for being here with me. I greatly appreciate it. And I'll see you in the next video.